Good afternoon. Your market news. Now, Asian shares fell ahead of U.S. non-farm payrolls data. The next big test for investors looking for more signs of more rates policy shifts from the Federal Reserve, while the dollar nursed heavy losses. Oil prices inching higher on hopes of further relaxation of COVID curbs in China, which could help demand recover in the world's second biggest economy. Locally, food producer and consumer goods company Tiger Brands lifted its dividend as it delivered higher profits despite a product recall and a tough economic environment. Then food producer Premier Foods has decided against listing on the JSE following turmoil in the local markets, particularly in the last 48 hours. The cancellation of the initial public offering means that Titan Premier Investments, which is owned by Christovisa and RMB, will buy the unlisted shares for 3.5 billion rand as set out in the pre-listing statement in November. But because we mentioned a bit earlier on that we did see a bit of a recovery when it comes to the rand. The rand did stabilize early this morning after that steep sell-off yesterday on speculation that President Cyril Ramaphosa was going to quit over a panel report that found preliminary evidence he may have violated the constitution. At one stage yesterday, we did see the rand plunging more than 4%. So this is where we're currently sitting. It was about 1760 at some point, but we're now back to around 1721, and we did say that massive 4% drop. It's probably the largest since we've seen since June 2020 and the height of COVID, and the currency moving against its emerging market peers who have benefited from that rhetoric that we've received from the Federal Reserve around the easing of, or rather even a possibility of slower rate increases from December. But let's look at the bond market. So we saw bond yields spiking yesterday to about 11.8%, but right now it's about 10.83. We did see this move as well, the biggest move that we've seen since March 2020. And as we mentioned, a lot of these themes such as economic performance, central bank policy, and risks around political developments do affect the bond market. So this is where we're sitting. And just to mention that our financials as well staging some recovery. We are seeing resources a little bit lower as it stands right now. However, the financials up 2% right now, resources down 2.6%. However, let's get into the market developments right now, and we're joined by Viv Govender from Rand Swiss. Viv, thank you so much for your time. I mean, it's been a busy, say, 24 hours or 48 hours, especially when you look at what's going on the market side. The market sentiment right now, following the turmoil we saw yesterday.
It's calmed down a bit. At one point yesterday, you were looking at like 10-cent moves every 10 minutes almost, which is quite a big move in the South African rand. Right now, I think things have calmed down. There's a bit more, to us wait and see into the approach, but we are still significantly weaker than we were, just before the news broke. I mean, a couple of days ago, we were sitting just below 17 rands to the dollar, and yesterday we went up to almost 18. That's a 5+% move in a day. Right now, like you mentioned, 1730 or so is where we are. Significantly better than 1790, but still much worse than 1690 or even 17. So yeah, I think the market's still waiting, seeing what's happening. But what it does indicate is that the market doesn't view any of the alternatives to Cyril Ramaphosa as being as attractive. They do view that this is factional, this is something that's internal to the ANC. But they do view that if the market, if he is replaced, the person replacing him is probably going to be more negative for the South African economy and the market overall than he is.
What was quite interesting as well is that following what we saw yesterday, we have Premier Foods cancelling their listing, which was set to take place next week, saying that the capital markets right now are not conducive to what they believe would be a successful IPO. I mean, that's quite interesting. And we do have Zeda listing the following week, and one wonders whether they will go ahead with it or not.
Yeah, look, I mean, I think obviously the market right now, when you have an IPO listing, what you're doing is you're selling shares and you're trying to get a price in that is going to be, at least relevant to, or also reflecting the true value you see in those shares. And right now, like they are correct, the market doesn't really have a clear idea of what's happening. I mean, the kind of movements we're seeing, at least in the local market, I think it's quite dangerous. Internationally, things are a bit safer, but right now, locally, we are seeing a lot of uncertainty. I think that is a reasonable thing. Even if we want to postpone until we have more clarity on who the president of the country is going to be in a few months' time, it might be a reasonable thing to do.
Local issues aside, other themes that caught your attention this week?
There's two major themes out there. One, what's happening in China, which we must, obviously take into account. It's the world's second largest economy, and the kind of, protest action we're seeing against COVID there is something we have not seen basically for about 30 years, effectively from Tiananmen days. And the other one, of course, is the U.S. Fed and what's happening there. And I think a smaller bit of news is that we are seeing the Europeans basically trying to impose a cap on Russian oil. I think they're coming down to about $60 a barrel, but they're trying to put a cap on that price. Let's just see how strong that is. But I think the major news stories are the Fed and China.
When you look at the dollar, are you buying into the idea that we may have reached peak dollar right now?
Look, I mean, it all depends on what your view is. Quite frankly, I've come to the view of the last year or so that the dollar is effectively the only hard currency in the world. The pound isn't a hard currency. The euro doesn't appear to be a hard currency. The yen isn't a hard currency. A hard currency is something that doesn't fall 20, 30% in a couple of days because of a bad news event. And then we've seen all of those things happen with the other currencies out there. The dollar may not be stronger than it is right now versus the other currencies in, say, 5 months or 10 months or like a year or two, who knows. But what I can say to you that of all the currencies in the world, the dollar is the one I don't expect to basically fall out of bed on the news event.
We have non-farm payrolls data later this afternoon. Expectations, rather market expectations for that figure?
Yeah, about 200,000 or so. Look, I mean, we're expecting reasonably strong numbers to come through. We don't expect, a significant drop-off in terms of employment. We have seen the JOLTS number slightly weaker. That's that openings number. But we've also seen a GDP number coming out this week that was like almost 3% for the US. So the US remains reasonably resilient. And I don't think that's all that bad, especially when one considers that the inflation number has come down. As long as inflation is coming down like it is, yes, the fact that there's still a strong jobs number out there, I don't think is as problematic. If inflation, however, was rising, then I think the market would be more concerned about a strong jobs number because it means the Fed would be more likely to start or revise its rate hike cycle.
Before I let you go, are you expecting some kind of Santa Claus rally given how the S&P ended November on the back of those Fed comments?
Yeah, I don't know if Santa Claus came a bit early this year, November, not December. Because, normally you would say that, okay, yeah, we'd expect a rally coming through, but the rally has been so strong in November. As you'd wonder if they're willing to go a bit further with, lackluster news events. A couple of things to be seen. The next inflation pick, I think, is very important, more important than the jobs pick. And the next, rate, announcement here. If, for instance, the Fed surprises by not giving, 0.5, giving 0.75, for instance, I think we probably see a bit of a pullback. But without those events, without that bit of surprises, and of course, assuming Europe is going through winter, and there's no major, global black swan event, I would expect to drift higher to the end of the year.
All right, Verv, thank you so much for your time. That is Verv Govender from Rand Swiss, giving us a wrap-up of the week as well as throwing forward to some of the events we need to be paying attention to. That is it from me. We're going to take a break. When we come back, we'll have more news for you, so stay tuned.